ConocoPhillips is lower despite beating on the top and the bottom line. The company completing its acquisition of Marathon Oil and announcing it will sell its Anadarko Basin assets. Joining us this morning in a CNBC exclusive interview is ConocoPhillips CEO Ryan Lance. Ryan, good morning. Good to have you back.
Thank you, Carl. Good to be back. Appreciate the opportunity.
Excited to talk about the quarter, especially this sort of asset disposition journey you've been on and where it stands, where it's going. Can you talk about that?
Yeah, sure. You know, we've strong financial results, top end of the production guidance, lower capital, and we completed the Marathon acquisition, which has been a bit of a driver for that, and that's gone really, really well for us. 25% more resource, more synergies, $1 billion one-time synergies, $1 billion of run rate synergies, and we're effectively delivering the same pro forma production with none of the Marathon rigs sitting in the business. And that's given us the ability then to look at the portfolio and think about some of the non-core assets that aren't competing for capital in our new scale and size in the company. And that's what really led to the $1.3 billion disposition. We promised the market about $2 billion of disposition following that integration with Marathon. We've over-delivered on that, and we're not done yet.
Explain to viewers where your production strategy is for yourselves and also for the industry, and how that ties in with the raw cost of the goods right now.
Yeah, right now we're seeing some deflationary forces a bit in the business, offset by some of the tariff impacts with steel and aluminum. But by and large, with the reduction in the rig rate, we're seeing some deflation across the U.S. side of the business, with a little bit of inflation going on globally, but it hasn't really been a significant cost of goods increase for the company. So we're running pretty well in the 60s, and look, there's some near-term choppiness in the market, but our long-term view is quite constructive given the demand growth that's occurring around the world, albeit there's a little bit of extra supply in the market with the OPEC Plus decisions, but that ought to work off relatively quickly. So long-term, we're very constructive.
I'm curious how you're assessing kind of the M&A picture right now, as we've seen earnings come in lower amid lower oil prices. And we heard Exxon's chief executive, Darren Woods, say that he was open to other M&A opportunities after losing that Chevron Hess bid. So kind of where do you see ConocoPhillips playing in all of that?
Yeah, I think we've been very active in this space over the last 4 years, Leslie. Look, we merged with Conch, we bought the Shell assets, and we most recently did the Marathon acquisition. So we've gotten our portfolio into a great spot. Now our focus has turned to the organic investments that we're making in the portfolio. Look, our asset quality advantage is significant against relative to our peers. Even the integrated majors were objectively, with third parties, viewed as some of the best tier one acreage in the unconventional space left, with decades of inventory. That, combined with our global portfolio today, gives us a ton of economic or organic opportunities to invest in the company. So that's where we're focused today, but that's coming on the back end of about 4 years of very active inorganic growth and mergers in the business. And I don't think that's done in our business as well as we go forward with some of the choppiness in the commodity price that I talked about earlier. But for our company, it's a focus right now on organic growth. The LNG business in the U.S. and in Qatar, and a large project that we're developing in Alaska. That's going to lead to $7 billion of free cash flow growth over the next 4 years, which is about equivalent to the free cash flow that we're delivering today. So a doubling of that in the next 4 years. And I think those are catalysts that are unmatched in our business, even with the integrated majors.
Do you get the sense that the market is hungrier for maybe some stronger production guidance? Where would pricing need to stand for you to step on the gas? And when do you think rig count turns around? It seems like every Friday we wait for the number, and it does come in a bit lower.
Yeah, I think there's a bit of choppiness at the $60, Carl. Look, I think the U.S. probably, we're like many, probably sits at a relatively plateau level at these kinds of prices. It's going to take a signal probably into the 70s. There's plenty of resource sitting in the U.S. The quality of some of that resource in some of our competitors is going down. And we're delivering modest, 2-3% production growth already. So we are growing our business off a platform that's 2.4 million barrels a day of production today. So we are growing the company. I think to see a broader signal across the U.S. flatten or start to incline the rig count probably needs more sustainable prices in the 70s relative to where they're at today.
What about LNG? And we've got the EU now committing to buying at least double what they have been in terms of that. Obviously, we talk here endlessly about the need of data centers for power, much of that supplied by natural gas. I know we got plenty of it, but can we get it where it needs to go and, do it all in a pretty quick manner?
Yeah, that's one of the challenges, David. Look, the infrastructure permitting reform, we need to get it from the central part of the USA out into the coast, in the Texas, really the Gulf of America coastline. We're leaning into that with a big project in Port Arthur. We expect there's going to be 10 to 15 BCF a day of incremental liquefaction capacity being built here in the U.S. that then we can export to our European and our Asian partners. And so that's coming. And as you said earlier, there's plenty of gas in the United States. The challenge is getting it from where the basins that's being produced, which is primarily in the Haynesville, the Marcellus, and the Permian. But we may see more infrastructure coming out of the Permian to handle the extra gas that's coming with the oil production. So it's pretty balanced, but you're right. In order to accommodate the AI and the electrification and the power that's going to be needed, a lot more infrastructure is going to get built. And that runs smack dab into this permitting reform. And somehow we've got to ease the pressure and speed that process up.
Yesterday, we saw additional tariffs placed on India as effectively retribution for buying Russian oil. If we start to see more actions like that, do you think American oil supply can fill that gap?
Well, I think today, again, it's going to take a price call, and that's the choppiness that we're creating in the business today with the tariffs. Is there going to be sanctions on Iran? Is there going to be further or strengthening sanctions on Russia? OPEC Plus is recognizing some of the demand growth, so they're bringing some of that spare supply into the business. So I think there's choppiness. Inventories that are a 5-year low here in the U.S. are starting to grow a little bit. That's why the curve is backwardated today. So there's some of that choppiness, but with sanctions and some of that other pressure and demand growth continuing, that's why I think when we get through this near term, say the end of 25 and into 26, I think the demand growth is going to kick in. Supply will be a bit challenged, so prices will have to go up to incentivize more of that supply, certainly from the U.S.
Right. Finally, on gasoline, I was just looking at some gasoline demand figures, I think, last month or two. It's been kind of the softest summer maybe since 2020, and I wonder, what do you think accounts for that? If it's sort of just macro activity or electrification of the vehicle fleet, something else?
I think it's this kind of activity, Carl. I mean, as you look at it, refineries the utilization is quite high right now on the refining side. And I think it's an equation. You got to look at both the gasoline and the diesel side of that equation. But yeah, it's been a little bit slower vehicle miles traveled as we've gone through the summer months. But we don't expect that to be a significant long-term trend. Certainly, there's electrification coming. It's increasing in places like China, slowly increasing here in the U.S., but that's just a very small piece of the overall supply-demand market on the oil side of the business.
Right. Ryan, so many cross currents going through the industry. Thanks for helping us understand a little bit better. It's good to see you.